This November, whispers in the financial corridors hint at a shift, a potential reversal of fortune that could redefine the trajectory of the most talked about stock on Wall Street. Dan Ives, the voice that echoed through the valleys of Silicon Valley, the seer of stock market movements, is known for bullish bets on the behemoth that is Tesla. But what if he was wrong? Could this be the turn of the tide for Tesla, or is it just another bend in the road for the EV titan? Let's explore the electric avenues of investment that could lead to Tesla stock's biggest month yet. A significant portion of electric vehicle service users rely on charging stations, with the cost per kilowatt hour being a vital metric. Contrary to critics' suggestions that home and office charging dominate, Tesla has exceeded expectations. Wedbush analyst Dan Ives highlighted Tesla's strong performance, especially after its second quarter delivery report showed figures surpassing Wall Street's expectations, minus 466,000 deliveries against a 447,000 forecast. Production also increased, reflecting enhanced capacity and a robust macroeconomic environment. Tesla's exclusivity in the EV market remains notable, with competitors such as GM and Ford now taking notice. The focus is shifting from charging to batteries and eventually to full self-driving AI. Tesla's monetization strategies continue to dispel negative narratives. Ives, a longtime Tesla advocate, has pointed out the positive market reaction to Tesla's collaboration with Ford and GM. Following the announcement of Tesla sharing its supercharger network, its shares reached an 8-month peak, a clear monetization win. Seeking Alpha, a go-to source for in-depth coverage of Tesla's developments, offers valuable insights into Tesla's stock performance and Elon Musk's groundbreaking tactics. They provide clarity amidst the usual media buzz. For a thorough analysis and exclusive discounts, visit the link in our description. Tesla's roadmap includes strategic price cuts that prioritize growth over immediate profits. This tactic has shown considerable success, particularly in China. Although margins are currently impacted, a rebound is expected shortly. Tesla remains at the forefront of the EV market, with Ives calling it a golden EV success story. The adoption of Tesla's supercharger network is expanding, with expectations for more companies like Hyundai and Honda to join. This trend started with Ford and rapidly included GM, Rivian, Volvo, Polestar, Mercedes-Benz, and Nissan. These partnerships could potentially yield up to $20 billion in revenue, according to Ives' analysis. Tesla is actively seeking to claim a portion of the $7.5 billion federal subsidy aimed at installing approximately 500,000 high-speed chargers across key U.S. highways. The Biden administration has specified that Tesla's eligibility depends on its network's accessibility to other automakers. Despite significant expenditures, around $42,000 per supercharger connector, Tesla's solutions remain more cost-efficient than competitors, who spend between $100,000 and $250,000 per connector. Tesla's stock has seen fluctuations, with a 10% increase this week and a 10% decrease over the past month. These movements appear to correlate with the broader tech market's performance, particularly the Nasdaq. Looking forward, the sentiment is that tech stocks, including Tesla as a disruptive tech entity, rather than a mere auto player, could experience a surge in the latter half of the year. Growth is expected to surpass projections, contributing to a burgeoning tech bull market. The supercharger network, the most extensive globally, has garnered significant attention. Recent deals allowing other OEMs access to its infrastructure from spring 2024 are expected to bolster Tesla's revenue significantly, potentially contributing $10 billion to $20 billion by 2030. Ives emphasizes that while the supercharger network is critical, it's just one aspect of Tesla's diversified portfolio. Strong production numbers, a growing energy business, advancements in autopilot and self-driving technology, a robust battery ecosystem, and increased production capacity all contribute to Tesla's solid financial standing. Aligned with the government's goal for zero carbon emissions by 2050, Ives confidently regards Tesla as a powerhouse. The company's EV castle is now primed to monetize its achievements, including an expected additional $3 billion in revenue from Ford and GM's integration into its network. Tesla plans to expand its supercharger network to 7,500 stations by 2024, more than doubling its current capacity. The network's reliance on solar power minimizes energy generation costs, amplifying profitability. IVES projects Tesla's total revenues to surpass $330 billion by the decade's end, a stark increase from the $94 billion reported recently. Among analysts, IVES stands out with one of the highest valuations on Tesla, setting a target price of $1,350 per share. This valuation is based on a forward earnings multiple, with a significant portion of analysts currently recommending Tesla stock as a buy. Despite recent volatility, the overarching perspective remains bullish on Tesla's growth trajectory. IVES has contended that last year's tech stock correction was overdone and anticipates a significant upswing in the sector, likening the current cycle to one not seen in 30 years. Despite the headwind of rising interest rates, IVES maintains a bullish stance on the tech industry, including sectors like software, cybersecurity, and semiconductors. He views this period as the dawn of a new tech bull market, rather than a time for concern over valuations. Tesla, under Elon Musk's leadership, has proven its ability to monetize its supercharger network and self-driving technology. Despite trading below IVE's target, skepticism from Tesla bears persists. Earnings reports indicating margin concerns and continuous price cuts fuel bearish narratives. However, IVES argues Tesla's growth journey is just beginning, evidenced by a more than 90% increase in the stock for the year. He counters bearish views, asserting Tesla's significant role in the tech and AI space, similar to perspectives from Cathie Wood of ARK Invest. IVES predicts Tesla's supercharger network could generate up to $20 billion in annual revenue by 2030, significantly contributing to the company's financial growth. This forecast assumes EV adoption will rise to 20% of all vehicles by the decade's end, up from the current 3 to 4%. His model also factors in a shift from predominantly home and workplace charging to a more diverse pattern, including long-distance EV charging. Tesla's dominance in the EV sector is increasingly apparent. Automakers like Hyundai, Honda, Acura, and others are joining Ford and GM in utilizing Tesla's charging infrastructure. These collaborations could yield up to $20 billion in revenue. The investment in the supercharger network, while significant, is markedly cost-effective compared to competitors. Tesla's stock, reflective of the tech industry's volatility, has seen a 10% increase this week, though it has decreased over the past month. Its movements align closely with NASDAQ and broader tech sector trends. The intricacies of Tesla's market strategy, including supercharger network expansion and competitive positioning, are crucial for understanding Tesla's future. Product announcements, quarterly earnings, shifts in environmental policy, and Elon Musk's social media activity all influence investor confidence. External economic conditions, such as interest rate changes, inflation, and global supply chain issues, also play roles. Tesla's alignment with the NASDAQ reflects a dance of numbers, narratives, and expectations. As the world pivots towards sustainable energy, Tesla's pioneering role in EVs, battery technology, and renewable energy solutions positions it at the forefront of this transformative wave. Investors scrutinize the company's fundamentals, growth potential, and competitive positioning. Tesla's significant investments in gigafactories, battery advancements, and supercharger expansion scale up infrastructure to meet rising EV demand. IVES projects a new era of growth for tech stocks, anticipating they will grow into their valuations in the coming years. He's raised Tesla's price target to $1,350, highlighting the company's potential in monetizing key products like its supercharger network and self-driving technology. Despite recent pullbacks due to margin concerns and price cuts, IVES remains bullish, buoyed by a more than 90% year-to-date increase. He argues against bearish perspectives that see Tesla merely as an automaker, aligning with the view of Tesla as a major tech and AI innovator. Tesla's plans to add 7,500 superchargers to its network by 2024 will enhance growth and leverage solar-powered energy generation. IVES suggests Tesla's revenue could surpass $330 billion by the decade's end. The company's expansive business, including the supercharger network, energy sector, autopilot, and self-driving development, and battery ecosystem, solidifies Tesla's financial position. IVES remains steadfast in his belief that Tesla is poised for substantial growth, positioning itself as a key player in the tech and AI space, and as a leader in the EV market transformation. As we look ahead, Tesla's innovative strides and the possibility of discovering the next big investment opportunity remain intriguing. Seeking Alpha emerges as an invaluable resource for tracking Tesla's developments and beyond. Don't miss their special offers. Explore Tesla's latest advancements through their insights.